Good afternoon viewers, welcome to your favorite research network, Live Tips. This is Mohan to give more updates about equity market for the day. Even we saw Nifty open with a positive note even today also. Yesterday it has closed above the psychological, what we are key levels we are saying the range bound 6050, and today it has opened with a little bit gap up on a spot basis, and even it's sustaining there. We need to see how much it will be there in the up to 2 o'clock. Since it is an expiry day, we may see some volatility after 2 o'clock. So one has to be cautious on that time. So everyone has to keep the stop loss for any long position or short position is going on that on the basis of the spot level. And even today we are seeing some resistance on Nifty around 5990 on the spot basis, and even in the future basis also. And for the if it is trading above 5990, then you can see an 6120 on a next level on higher side, and even if it is trading below 6070, then you can say on a spot basis, and you can say on up to 6040 can be possible on the market for the day. And for the movers today, we see most of all the banking, but a little bit short covering was there even today also. And apart from this steel sector, like Hindalco, Tata Steel is doing well, and even some mixed action can be visible, and even Jindal Steel is a little bit weakness was showing, and even Sterlite was minorly and flat note, and not much movement for the day. We are seeing just a bit of a flat kind on market on after the gap up open. That's all about the current market. We'll be back on the evening session. Thank you viewers. Still we have commodity and currency market to discuss more after this short commercial. Don't go away. Stay with us.
Good afternoon viewers. Welcome back to your favorite research network, Live Tips. We will have a quick update on what is happening in the currency market with Mr. Joy, and later during the session we will discuss the commodities market with myself, Navneet. Welcome, Mr. Joy.
Thanks.
So, Mr. Joy, how is dollar trading in the morning session?
Well, the dollar weakened broadly on Thursday, hitting a 7-week low against the yen and a 28-year low against the Australian currency, as traders took force the US bond yield as a clue to sell the currency as well. The US Treasury price recovered on Wednesday, pushing yields sharply lower after a 29 billion auction of 7-year notes. It was a surprisingly strong debate after a week 5-year sale.
So, Mr. Joy, can you explain the relationship between the bond yields and the currency movements?
Well, the relationship with bond yields and the value of a currency is not always straightforward, but the lower yields on US bond yields and will make a currency less attractive for investors chasing better returns. So this means that the US bond yields and the currency movements are positively correlated. But this month the correlation has broken down, as we have seen that the dollar fell even as the 2-year yield rose. But some marketplace says that the relationship will return next month when the market becomes more liquid, as many marketplaces will come back from holidays.
Okay, so we can see some volume trading happening after the holidays. So how is it trading against the Japanese yen?
Well, the dollar slipped as low as 81.28 yen. That's the lowest in 7 weeks, and edging closer to a 15-year low of 80.21 yen. That's hit in the November.
Okay. So what are the major economic data noises today, and that will be impacting the dollar movement?
Well, the data on US initial jobless claims later in the day, and more importantly US manufacturing data due on Monday could provide the momentum to dollar going forward. Okay. So the market is keenly watching these data to come.
So okay, fine. So how is the euro trading today in morning session?
Well, the euro stayed near Wednesday's side, changing hands at 1.3227, which corresponded to a 38.2% retracement of its fall from 1.35 to 1.305 earlier this month. The currency stubborn refuses to break below the 200-day moving average, now at $1.3086, as frustrated bearish investors who thinking that the Eurozone debt crisis could spread to Spain and Portugal in early 2011.
Okay. Okay. So what is the resistance level for today?
Well, on the upside, you could target 1.327580. That's its highest on Tuesday, as well as a 50% retracement from the fall.
Okay, so how is the Swiss franc trading today?
Well, the Swiss franc, which has attracted funds escaping Eurozone debt, hit a new high recording against the dollar of 0.9418 francs per dollar. Okay. So we are seeing an upward movement in the Swiss franc that's coming from yesterday's.
Okay, thanks to the European debt crisis that is going on. So, Mr. Joy, we have seen the Australian dollar is moving upward in the last several trading sessions. Do you see any supportive movement, supportive factors that is coming in for supporting this upward movement?
Well, the rising commodity prices has boosted the Aussie's currency and helped investors shrug off fears that a recent Chinese interest rate high goods loss Chinese economy and thus damage demand for Australian export. That's mainly because Australian market is the largest exporter of commodity to Chinese market. So any economic policies taken by the Chinese government to dampen the growth will have a negative impact on the Australian currency.
Okay. So how is the Australian dollar trading against US currency today?
Well, the Australian dollar traded near the highest level since 1982 as signs that the US economic recovery is gaining momentum, despite demand for higher yielding assets. The so-called Aussie held on to an 8-day gain against the greenback. That's the longest rally since March 2009. Before reports today forecast to show US initial jobless claims fell and business expanded for a 15th month.
Okay.
So Australian currency was at 1.0168 at 2:50 p.m. in Sydney from 1.0179 in New York after touching 1.0198. That's the highest since July 1982. Those is settled for a 13.3% gain this year against its US counterparts. That's the second best performer against major peers after the yen.
Okay. So we have seen some good buying happening in Australia after the parity level was achieved. So how is New Zealand dollar trading today?
Well, the New Zealand dollar was close to a 5-week high after the MSCI World Index of Stocks recovered all its losses since 2008 collapse of Lehman Brothers holding industry to get a financial crisis. New Zealand dollar traded 76.72 US cents from 76.86 cents in New York. It earlier reached 76.93 cents, that the highest since November 23rd. It fell 62.49 yen from 62.73 yen. So we have seen a fall in the Australian currency against the yen.
Okay. So thank you, Joy, for valuable updates.
Thanks,
Okay. Stay back, viewers. We'll be back with commodities market after this commercial.
Welcome back, viewers. We'll discuss the commodities market with Mr. Navneet. Welcome, Mr. Navneet.
Thank you, sir.
So, Mr. Navneet, how is gold and silver trading in the Asian trading sections today?
Yeah. The depreciating currencies and inflation concerns may support the gold prices and help it advance for a 5th consecutive day, heading for the 10th annual gain.
Okay.
Gold for immediate delivery rose as much as 0.2% to $1,414.10 an ounce and traded at $1,412.60. Gold is expected to surpass a highs of $1,431.25 made on December 7th in the coming months as rising commodity prices are expected to increase inflation rates globally. Absence of an alternative instrument against currency weaknesses is resulting in a lot of hot money inflows coming into the gold. The trend is expected to continue in 2011 as a portion of investors' wealth will be diversified into gold for portfolio hedging. The dollar index fell for a second day, dropping to a new 2-week low level against a basket of 6 major currencies on speculation that the global recovery is gathering pace.
Okay.
Silver was trading little change at $30.6225 an ounce during the early Asian trading session. The silver is expected to outperform gold owing to the strong fundamental demand and being an industrially prominent metal. So that is an clear advantage that silver is having against gold. A South Korean report showed industrial production expanded for a 17th consecutive month, adding to signs that Asian economies are picking up in economic recovery that is happening. This resulted in dollar index dropping against other major counterparts and was supportive for silver prices. Markets should be keenly following the US data releases in the form of pending home sales and unemployment claims numbers to get further cues regarding the direction of the market in today's COMEX trading session. Any negative surprises in this could result in buying interest continuing in silver and could result in a bullish trend continuing for today also.
Okay. So, Mr. Nadi, we have seen that the gold and silver has rallied more than 30% in 2010. So, do you see that the current rally will continue in 2011?
Yeah. We are expecting the rally to continue in 2011 because of two main reasons.
Okay.
One is that the European debt crisis that is persisting in that area is still persisting.
Okay.
There is no solution that has been found inside, and there is little more confusion about more and more countries which will be availing bailout from ECB in the coming days, in fact, coming months, in fact. So probably this picture will be clear only after the market reopens after the New Year holidays. And second thing is that the global inflation rates are also expected to spike up because we have been seeing a lot of investment that is coming into the base metal and crude oil commodities, especially in case of energy and base metals. So these two factors will be fueling the inflation rates higher. Okay. So we will be seeing more investments coming into the gold and silver prices, and we can see it making new highs in 2011, probably by the first half of 2011.
Okay, so we are seeing that the Europeans are debt crisis and the inflations are positive for the gold and silver.
Exactly. Any news that creates a currency weakness, it can indicate towards a currency weakness. We can see money flow coming into bullions as a case of hedging.
Okay, fine. So how is the energy market trading ahead of the weekly inventory data release?
Yeah, crude oil prices still holding on to the $91 marks on expectation that the US Energy Department release will show that the inventories probably fell for a 4th week. Oil dropped in yesterday's NYMEX trading session after the industry-funded American Petroleum Institute said supplies rose to 3.06 million barrels or 0.9% to 345.1 million barrels. Crude for February delivery was at $91.15 a barrel, up 3 cents in electronic trading session on the New York Mercantile Exchange. Yesterday it lost 37 cents to $91.12. An Energy Department release is expected to show that US oil inventories probably fell by 2.85 million barrels in the week ended December 24. So that is a supporting data which is expected in today's market. The gasoline stockpiles are expected to rise by 1.5 million barrels from 217.2 million. Distillate fuel inventories, including the heating oil and diesel, are expected to have slipped 625,000 barrels from 160.7 million barrels. So probably the market will be keenly watching the inventory data for getting a cue in crude oil prices. Coming to natural gas, US Energy Department will be releasing the weekly natural gas inventory data today. Markets will be taking cues from this data release. Analysts estimate that inventory levels to fall by 171 BCF as against some previous value of minus 184 BCF. The cold wave hitting US, Canada and European countries are expected to increase the demand for natural gas and will be supportive for prices. Markets are expected to trade in a volatile manner around 11 GMT owing to the inventory data base. So the participants should be very careful in trading at this time actually.
Okay.
A higher than expected fall in inventory numbers could result in further buying interest building up in natural gas futures in NYMEX. Almost 8,200 flights have been cancelled as a storm has hit 3 days ago, closed major airports. So this shows the severity of cold wave that is going on in the US. Profit booking may come in natural gas if the cold wave subsides in the coming days. So probably till that time we have got an opportunity to trade in the market.
Okay. So Mr. Navneet, what is the trend that is picking up in the copper in the Asian and European trading section?
Yeah. Copper prices witnessed some profit booking trend coming in early Asian trading session as many investors preferred to lock in their profits after the metals rose to record levels yesterday.
Okay.
The Chinese Purchasing Managers Index released today by HSBC Holding PLC and Market Economics fell to 54.4 from 55.3 in November. So that clearly shows that probably the rate hikes that has been taken by the Chinese central bank has coming into effect in this today's market. So we have seen the manufacturing activity cooling off a bit. 3-month copper on the London Metal Exchange traded at $9,394.25 a metric ton after falling 0.2% earlier. It reached an all-time high of $9,447 a ton yesterday and is up 27% this year, poised for a second annual increase. Copper futures on the COMEX in New York were unchanged at $4.3105 a pound after reaching a record of $4.3350 this week. So we are seeing some supporting factors coming in for the copper prices. Inventories monitored by LME rose for the 11th straight session yesterday to the highest level in more than 2 months. This might be due to the fact that the spot market buyers are staying away owing to the increased prices. Probably we will be seeing these people coming back into the market after the New York market opens after the new year. The copper stockpiles has declined by 26% this year, poised for the first annual decline since 2004. Strong fundamental demand and supply constraint may push prices to higher levels in the first half of 2011. So overall bullish trend is still impacted in base metal commodities.
Okay. Thanks, Navneet, for your valuable updates. So that's all for now, viewers. We will be back with more updates in the evening section. Till then, this is Joy with Mr. Navneet saying goodbye.